Regulatory overreach. There has always been a difficult balance between the NAIC's two goals of effective and efficient regulation. But slowly, over the last few decades, and particularly in the last few years, regulation has become increasingly political, with a constantly increasing number of data calls and attempts to change contract terms after losses occur. PCI's recent study of regulatory costs revealed a shocking 19% increase in insurers' compliance costs over just the last 2 years. And that was before recent data calls on thermal coal investments, diversity, climate change, which are all important issues, but not directly related to insurance solvency or market conduct. The increased compliance costs are particularly harmful to small and mid-sized insurers, who we estimate suffer several times the cost per premium dollar as the largest carriers, making the increased burdens very anti-competitive for them. 9% of PCI members anticipate that their compliance costs are going to continue to grow. And in part, the industry is facing what I call a regulatory systemic risk, where bad ideas crop up internationally, they get endorsed by various U.S. federal agencies, and then are implemented by sympathetic state insurance commissioners. Federal regulators have collectively approved 58 economically significant rulemakings in just the first 5 months of 2016. That includes rules with an annual cost of $100 million or more, and the state regulators are piling on as well, so we expect it to continue to get worse. PCI is working with state, federal, and international policymakers to help them understand the increasing costs of regulatory excess and how it ultimately harms consumers. We're also recommending principles for regulators to consider before data calls, and ultimately PCI is fighting back on a case-by-case basis, whether through the courts, Congress, state legislators, to create more resistance. If we don't stand up for ourselves, no one will.